a little bit more about gaps. But for now, here is the AM session ICT Silver Bullet, trading up into that gap high. Swing low is right there. So it hit our higher time frame weekly objective. That's a key level. It hits it, breaks lower, shift in market structure that's bearish. Small little imbalance here. This right here, that move right there, that is the 2022 ICT mentorship model. So buy side taken into a premium, shift in market structure, fair value gap, trades up into it, there's your sell. Go short. What do you aim for? Relative equal lows and liquidity. And if you want to be overzealous, you can aim for the weekly gap low. I personally wouldn't have, but for the sake of argument, you could have. Now, if you're trading the ICT Silver Bullet, which is the model that I've taught you for 2023 for the YouTube ICT mentorship, we have a shift in market structure that's much more pronounced. So this swing low here is broken. We have a fair value gap between this candle's high and that candle's low. This is a SIBI, sell side imbalance, buy side inefficiency. Price returns back up. There's your short. You'd have to endure one more time in a small amount of drawdown in here. It spends a little bit of time and then finally gives up the ghost, breaks one more time below that low, digs into this sell side, but notice that that low is just barely below those. You know what it's reaching for. New week opening gap. They're like a magnet, okay? The market drops, comes back up, another fair value gap. So you could have taken this one if you didn't take that one. Or you could have traded this one short, pyramided more in here. Drops down, look where that low is on that candle, right there. That's the new week opening gap low. Bang, perfect, right to the tick. Runs right back up in. Returning back to the old fair value gap. Dropping aggressive. Small gap in here around new week opening gap. Trades up into it here, which is institutional order flow entry trail, which is a partial return into, not a complete closure of that gap. That candle's high, that candle's low, just a little bit above the low, and then consolidates and tears off and goes lower. And I'm going to tell you how that low would be significant. If you take the high here and add your fib to it here and draw it down to that low, one standard deviation would be 4278.75. That's a pretty handsome objective. If we treat that high to that low, this low being a fulcrum point. That means if this move from high to that low was like a door, okay, and it swung, this was the hinge of the door. This high, if it was allowed to swing completely all the way around, it would come right down, right below that low here, it would come to that price point here. So all I'm saying is this range from that low to high, subtracted from that low, takes us right to this 4278.75. That's pretty good, isn't it? Yeah, that's a pretty good run for a silver bullet. Getting short around the 4298 level. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 handles. That's a pretty good day. Even if you're trading with one